Good morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How's your week?
It was good. A lot of my stuff is range is tightening a bit, so it's playing off pivots. A lot of 15-minute trades, but FedEx up and Nike down. That was kind of the story for me, as far as just putting a little into earnings and taking a lot out. That's what you want. So yeah, those were good. Those were pretty clean looks, and if that has any indication of the Q3 earnings are going to be like, there's going to be some pretty big winners and losers. Most losers, I kind of look for the bounce and that mid candle relief. I don't know about Nike on that yet. Walgreens, no, but a lot of software. That's what's been going on, and we're seeing the result of that in some of these setups we talk about, like MDB and Snow. That recovery is getting moving.
Nice. A pretty decent week. Not a blow it out of the water week for me, but I think he said the same thing I had in my notes. The range bound are kind of stuck inside the box.
Yeah,
If you're a little greedy, probably getting washed around a little bit. If you're good at profit taking, plenty of trades because you can re-enter. I think I pounded the table a little bit of that midweek to one of the members that um, if you take profit and you're going to be able to retrade it, if you're sitting there waiting for the top, you could be waiting forever and miss three or four trades along the way. So just kind of being mindful of that, knowing that this market cycle um, and the summer are coming up. Probably going to be a little bit change on how it is lately, and still trying to figure out the T1 rules. Volume's just been weird since that change for me, at least on my side. I don't know how much it's affected you, but um, more not necessarily sporadic, but more intense in the time that there is activity, and then kind of fades away, and you don't get that. Um, I guess that next wave on a schedule yet, or I haven't figured out the schedule of the next wave yet. So, but yeah,
I think
overall great
options
week.
have dropped off.
Go ahead.
Oh,
Sorry.
go ahead. Yeah,
No, go
yeah,
ahead.
yeah. Options have dropped off a bit. I think in part because people used options, you know, for the profit potential, but also those have always settled in one day. So the
Okay.
ability to do that with shares now, um, gets people maybe into more share trades on on some of these things. But yeah, I mean, overall, I think the June expiration. It was good to get through that. I'm getting a lot more clarity, I think, on reads, and we're far enough away from July 19th where those are um, relevant on more than a day trade level. And then with the way August and January options are kicking up, people really got to recalibrate their feeling about leaps. January is not a leap by any stretch, so you need to be thinking about that. And for a lot of stocks too, they don't necessarily have contracts listed for much beyond, it's either January 2025 or January 2026. And um, this is where I think a lot of flow readers struggle, is figuring out kind of like what the narrative is with that trade given its expiration. So that's one of the big things I try to unpack for the group.
Yeah, Q3 is usually my favorite earnings quarter, so I'm a little excited of that. But you also run
Yeah.
into the summer kind of being, I won't say slow, but really focused on what's moving in the summer. It's when I think sectors are most effective is in the summer because you'll have something against the grain
Yeah.
when most aren't. So um, July though, usually a hot month. I think we stay on this path here though for another month. I don't know how you see it, but to me it feels like we're not necessarily at the end, um, but the ones that are lagging are gonna kind of lead the way here towards the end of this. What do we call it? Unk the pump market? I don't know what we call it. Penny market.
Um, yeah, there's a lot of front loaded smalls in the $2 to $5 range, and then you get Yeah, something about like the $8 stocks making that move to 10 and then getting explosive after 10. There's a lot of that kind of look too. So yeah, it's just about finding the right ones. I with small caps, I mean people probably see me talk about it. I'm never like I don't like the indices for small caps at all. I
Sure.
think it's always going to be like big winners, stagnant, or charts that just bleed out and keep going. So um, you just you find some strength. I don't care that Piton's down 90 some percent from its all time highs or whatever. Doesn't matter. I mean, it's a new setup. Completely almost like a new chart and new flow. So like it's those high numbers aren't relevant to what's going on. And I know it makes for a good tweet for people, but ones like that are some of the best things you're going to find. I think share side for sure.
Yeah, no, to me it seems like again like they're just those ones that are lagging or are left, I guess, to have that kind of range. Um, I think we start the rate run again. Um, it come like September, maybe late August. But that gap till there, you're gonna have this kind of more of this, you know, week or two up and then some flattening. And when you say like I don't listen into the indices on the small caps, yeah, as soon as we start talking about the Russell, I'm done with it. Because it just doesn't move the same way. It's not set up or structured the same way. There's a lot more stocks in that have smaller market caps. So it's I don't know. It's just never been something that I even look at because the individual stories are more important. Um, like Carvana didn't move anything.
Yeah.
It's
Oh,
not moving
absolutely.
the Russell 200 or anything like that.
Right. I think with the rate cut story, to me, solar real and real estate,
Yes.
for the most part, have kind of like completely reset from the last time there was a rate cut expectation, and so then charts pulled back a little higher than they were. I mean, open, I think that was under $1 for a little while, right? It was like
Yeah.
80 cents or something. But yeah, I mean, so new setups there, and um, it's a few spots where the selling's been pretty aggressive. I had a note on solar. I was like, look, I am looking for a bounce, but I just keep a put because these can drop 6-8% in a day. First solar fell 9% on Friday. So you take one contract and you just say like I'm just going to keep this, see what happens, like, and it could be your biggest win of the day. So they're still kind of in that mode, and you got to be careful. I think shares are best, smalls are best for that sector right now. But yeah, there's a big opportunity there, and it's going to move on the same narrative, same story, expectations of cuts. Cuts themselves might not be bullish, but the run up to it certainly I think will be.
Yeah, no, I think you kind of learn, not to like pivot or anything, but you kind of learn from, for us, crypto, and like you get the catalyst. All right, Bitcoin's leveling off here at 60K. We're gonna get a little bounce. That was it this week. Um, but it's not the same charts every time,
Yeah,
and that goes for any sector or any thesis or story that we find. I mean, we can have a great EV thesis, and there's going to be charts just in better shape at that point in time to trade, and we could have a nice silver or
yeah,
gold thesis, and there's just charts that are better. And I think Bitcoin does that more often. The rotation through the names or what names are the best when we get a little bit of a spike in Bitcoin. Um, but you have to
yeah,
apply the reason I say that is you have to apply that to pretty much whatever you're trading, um, because that's just kind of the not really the skill set, but just a necessary skill that you have to have. You can't just trade the same thing over and over again. But if you trade the cycle
yeah.
or the stories over and over again, you're not going to be able to trade the same stocks over and over again. So having that broad sector view, that's what's really helped me when I feel like I miss things that you find along the way.
The yeah, and like with even with oil, I mean, there's a
Yes.
moment for Oxy and Exxon,
Yep.
and then we got shitty pennies in oil too, and then we've got like smaller caps that have a lot of legitimate potential, like Rig, um, but HUSA, like um, Next, so we definitely we see that in every sector. It's such a big key to how I read flow. It's something that nobody else is really doing. I don't see other people on this at all. They go, they'll focus on their spy, and then they focus on a couple individual names. They're usually chasing something that's running, like they did with Chewy a couple
Yes.
weeks later than us. So there's no one replicating our process, um, and they couldn't if they wanted to. Just I don't. It's my feeling.
Yeah, no, getting on Twitter a little bit, man. Those guys they just form a bias and stay with it until it's true. Um, like,
Yeah,
I mean, we're gonna have a down day, and then the one down day they get the 2% move, and they use that as a way to pump that they were right, or maybe move on from their thesis. But the overall atmosphere over there is just dying on stances that aren't really come upon with any kind of research skill or process. They're just I'm picking a side and I'm gonna stick with it until it works.
the latest one that people like, I kind of ruffled some feathers, but I just said that it just was odd to me to buy Amazon up here with basically like the certainty that I'm going to run this to $220, and not I'm going to run this to $220 in my long term account, a year from now or 2 years from now. But no, I'm going to buy options for July, and this is going to moon like Nvidia, and I just like I don't know what people are seeing or doing that makes them think that, and they're just like, oh well, AI, and it's just so late. I mean, we Amazon and Google, we talked about those months ago, and you'd be in great shape having bought there, and now you're kind of chilling and seeing what leg up we get, but yeah, so I don't know, and it's like I just see, I guess they're all in discords with each other or whatever, but it's just guys saying the same things about the same stocks over and over again. Baba value stock now, um, Amazon's the other one, but yeah, they're chasing this last little bit of a move a lot of times,
Yes.
and in the option game, that's just really bad. When you're talking 5% up, 12% down, in a large cap, that's just not where you want to be.
Yeah, I mean that in general, we don't really do too often. We're trying to be first by a mile, by a few weeks.
Yeah,
Um, not the
yeah.
last end of not the last little bit of the candle and the last little bit of the cigarette, but and if we did chase something like that, I think it would have to have a thesis, a reason, or the range for that. Um, there's just better stuff to
So
trade
L,
if you look through the barrel.
yeah, the all time high chart thing. It works. It's got to be a particular setup, and it's not a tech mega cap. It's ELF. It's MDB, or like the
I haven't seen
because
many.
MDB had
I
run
haven't
pretty
seen many
significantly.
mega caps at all that you've really played that are all time highs. They're usually lower floats or maybe 100, 200 million shares at most.
Yeah.
I mean, I think that's part
Oh,
of
they
it.
are right.
That's
So
part of it.
yeah, LLY caught the huge move on it. It took 6-8 weeks before I got back into it, because it's set up at those levels to go higher. But yeah, you've got to UNH was like that. Um, you just got to wait. You should be patient. And one of the things that I think should help our group be patient is, like, I got something for you to look at. You don't have to be impatient and laser focused on one stock. Um, we got a range of things and a range of styles that you can build. Um, do you want to talk about the dollar and the 10 year for a second?
Sure. What do
I
you
just want
got?
to give my ideas on this and
Yeah,
kind of see what you,
let's do
you
it.
think. So I don't look at these as bearish signals necessarily, but I will say that when the 10 year starts to take off, went up almost 3% Friday.
Okay.
has been moving up, the past few weeks. To me, what I see in that is it limits how well these stocks can hold gains, especially in I see it a lot in software where and now now kind of hardware's cooling off too, where if Dell pops 3% in the morning, it's gonna give that back, and most, if not all of it, and then maybe it makes a secondary move, but these are pop and fade conditions in most of the stuff I trade. So chasing becomes especially dangerous when the 10 years moving up and when the dollar's 105. You kind of want the dollar about 102 in recent history to get kind of that follow through on an initial pop. Otherwise, you just got to wait. There's usually some sellers the first hour, and then we kind of go from there. But that's just what I'm seeing, and I do attribute it in part to the 10 year and the strength of the dollar.
When you have some of the bigger names and a lot of the safety names, I guess, or the stuff that people want in their portfolio, when it runs 150%, I don't think a lot of those people are adding to the position. I think they're trimming the position. Um, then
Yeah,
you kind of look for a safer place to pull your money. I mean, that's just the standard rotation after a bull run. Um, is to go to the safer stuff like that, or the money markets, so to speak, for the pullback. Um, just normally we don't have such a bull market in. I mean, we're not even a year to that November bottom yet, and a lot of things have moved dramatically. I mean, even if you take even SPY, it's up 20-25% from November. So I think that plays a little part in it with the bigger fish. When they start to scale out, they got to go
yeah.
somewhere. They got to go somewhere, and I think that's the safer place, or that's just the standard rotation for those guys to hang out in between the bull and the bear markets. If you're not taking profit right now, though, in
Yeah.
general on everything, or that you have, I mean, even in your long term, if you're not taking a little bit of profit right now, you're kind of an asshole. It's just what it is at this point in the game.
Um, yeah, no, absolutely. And so I had this plan for a long time with AVGO, where at the kind of before the split, it's like I wanted 10 shares. Well, I sold most of them when on the pullback to 1800, and and now it's 1600. So I'm like, I'll just buy them later, because they hadn't split yet. But I don't that move and that follow through was just so phenomenal that it's like I'll go ahead and change my plan and take some off the table here, and just rebuy it later. Chipotle was the same way. So yeah, I mean, even the longest of long term plans, I think sometimes you're not going to feel too bad about taking some money from it,
And most things, like you said,
given
will
where
give
we're
you
coming from.
most things will give you the reentry. Um, I get into that with
Yeah,
my son all the time on SoFi. It's like, bro, you're getting 25-30% range on this thing. Just take half off, and then when it comes back to the bottom, buy your half back. And it's a hard sell for people with an overall thesis, but staying flexible and always having a plan to take profit. You're close 10 trades green. Tell me when you're broke. I mean, that's it goes back to that. Like, um, at least for me, especially on stuff that's ran this far. And I can use my own. I mean, some people probably look at it as a loss at this point, but look at me in Nvidia. I'm still happy about that trade, and it ran a lot farther than where I got out in the mid 700s. So, but that was the plan. We stuck to it. We moved on. We've used that capital for something else since then, and you kind of keep going forward. But the plan is protection, not maximum profit, and you got to keep that in your arsenal of skills.
um, yeah, and at the point at which um, you sold Nvidia, it had a significant pullback, right after that. It was at kind of an inflection point, and could have easily dipped to 500 from your spot. So,
Yeah, yeah. Well, it did. It
I
dipped to
mean,
630 or something
you
like
know,
that.
yeah, yeah. So there's just so much. There's so much, uncertainty with that. And then yeah, it made that move back up. We caught it in options a few times. I don't like trading that one as much, but yeah, but certainly on to the next. I mean, Roku, like, I
Yeah,
mean,
true.
I'd be
Yeah.
kicking myself if I had kept Roku through all this because
Yeah.
we're back down, just all the way back,
Well,
and
I think
looking to set back up now.
you go through that 3 or 4 times as a trader. I think you really do. I don't know anyone that hasn't that are like, man, I've held this for how long?
Yeah,
I'm like even or maybe mildly up on the position. Usually is the case when you have this thought. It's not when you're down. And you just are like, well, if I would have sold some here, bought back here, sold some here, bought back here, and you kind of look at the chart. You look at the chart and you're like, I should have 3 or 4 trades of 20% instead of just being even here. And I think everyone goes through that as a trader
yeah,
before they pivot to take profit and re-enter, take profit, re-enter, and have that mindset going into the original trade and keeping that mindset after you get that boner candle on a Monday or Tuesday.
um, FedEx was a good example. I mean, these last two earnings, FedEx, it hit its pre-market high, and then the day after earnings, kind of bled out for a bit, and then made another move. If you kept those earnings lottos, um, that morning you gave back about $200 or more, and then yeah, it bounced back and recovered. But isn't it better to just sell right at the gun, and then let's see what the chart does, and then you can just go back in smaller, and still, you know, get a secondary trade out of it. But diamond handing and earnings lotto is usually not what you want to be doing. Um, that trade works or it doesn't as the market opens. In general, for me, that's how I approach those.
One of the things that doesn't really translate over to shares that I think you guys have an advantage on the option side is especially in that kind of situation. You enter, you watch it a day or two before you enter, you get the big pop on earnings or whatever the hell, you get a big pop. You kind of already know the ranges of that contract you're trading. Um, where the shares just kind of don't change. It's a share price. But you have an understanding from like where the contract should be from 2 days ago. You've watched the move up. You know where it should come back and find support. Again, if you couple that with the TA on the chart, I think that's a big advantage. And not using that to your advantage, I think a lot of people miss that point because you're already kind of like. I mean, it's the time and sales part of the option. You know the prices of the option. You know how it moves because you've just had a dub off of it and you've been watching that exact contract. And when that six, or excuse me, when that 715 or 718 contract expires, it's just gone and it's never coming back. And you got to move on to the eights, or the nines, or the Januaries. And
Yeah,
I think a lot of people miss that, adding that to their style or using it to their advantage.
yeah, absolutely. And well, FedEx was actually a share combo for me. Bought shares under 250, and went ahead and got rid of most of them on that move to 300, just because I think it's going to take some time around there. But
Jesus Christ.
I mean, that's $50 a share. That's
It's
not
20%.
massive, but
It's twenty
pretty good.
percent.
Yeah, I mean, on a stock that big, I'll take that. So yeah, that felt pretty good, for sure.
Um, why you
What
said
are
that?
your?
Oh,
Oh,
go
go
ahead.
ahead.
No, go ahead. Go ahead.
Oh, I was just wondering, where your thinking is on, kind of the boring stuff, the gold and silver, um, kind of what you're seeing there.
Well, I usually follow you for the price of commodities and make sure those are healthy and have a target and base my opinions on that. But I love the
Yeah.
charts. There's 3 or 4 charts
Uh,
last week that I really liked, and um, A couple of them I'm really focused on. Sand for sure. HL. Um,
Yeah, big moment for silver. It's it's dipped under 30, and I think it's just setting up again to me. But yeah, I'm expecting some pretty big things out of that.
my curve is
And
slowly
gold,
my curve is slowly moving. So when you say silver 30, I'm still in the mindset of fuck. We were waiting for 26, so 30 is real good.
I
Uh,
know, yeah, 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 yeah,
I
yeah.
just
It's
I just don't lose that anchor, I guess, or the original part of the story, and that's still in my head. Is we were waiting for 26 or 27 to break, and now we're like letting 30 confirm. This is still this is still in an uptrend. I don't know how else to say it. You're just finding a higher low.
well, the silver miners, their pullback exceeded the pullback
Yes.
in the commodity, which is good. You want that. That's the divergence you want, because they can retrace so quickly. So, yeah, I think we're still in great shape there. And I don't know. I'm not someone who I don't think gold taking off or being bullish is bearish for anything else. I think it's gold is going to kind of do its thing. Um, but yeah, I mean those two, and it's just such a when I see people struggling and they're not looking at these, I kind of wonder what are we doing? Um, you want something that is pretty safe that you don't have to check the minute chart on. That's I think the adaptation people need to make when they're struggling, because I'm always a little bit surprised to hear about people struggling when I reread my notes and four of the five notes did exactly what I said they were going to do, and people still lose. So I I just want I kind of want to know what are you trading and what's going on, to make that happen when I get you.
I think on that topic, I think anybody that is in that situation is just waiting for confirmation off your note. And sometimes that confirmation, especially in the options world, is the trade. That's just how that works. Um,
Yeah,
it's
yeah,
it's the trade, or it's the let's say if it's moving 50%, you get 30 of it, and that's their confirmation, and they go green to red on that last 15 to 20% of the 50% move, and then they're stuck in between that good entry price and their entry price. And you can't hold on to options. You have to be quicker at saying I'm wrong than share side. And again, another skill I think a lot of people don't have is, and I think it's one of my most valuable assets, is I'm real quick when I'm wrong. You can't sit there and hold on when you're wrong, because it will just leak out on you, especially on option side. I don't even trade options, so if I'm saying that from the share side, you guys really got to have that on the option side of wrong fast and wrong early is just better for you. Even if you're wrong that you were wrong, it's better for you.
I think that especially sometimes it's a win that keeps them in it, because like it goes up 30%, they didn't sell it, now it dips back to flat and they're kicking themselves.
Yep.
Um, just cut it loose. You don't want the trade that was up 30% to be down 30%. That's just not good psychologically. You close it flat, or you lose $10. On to the next, and just take it as a lesson. But don't take unnecessary losses like that. It's just not worth it.
Well, I think that goes back to like the what I was saying about you entered on Tuesday or whatever for the Thursday ER, and then the Thursday ER happens, and the price of the contract. It goes back to that, and not wanting to re-enter the trade that you just won on, or the trade you've been following, and just wanting to go to the next one, and you're in a foreign land again. So it's real hard to figure out the range of the stock. And it's gonna cost you a little bit, in my opinion, to figure that out if that's your style. So if you have something that runs 30%, you don't trade it regularly, probably should drop a stop loss at 20, 15%, so you can just avoid. ever going green to red, and then learning that stock a little bit. I mean, I know you don't talk about it a lot, but I see it clear as day. I mean, that's why you trade coin and um, MDB and AVGO. It's because you're very familiar with those contracts, and it's what you need to keep the lights on, so to speak.
Yeah, absolutely. When I'm in something, for me to take on a completely new stock, it's usually a swing trade. That INFA is a good example of that. It's like, this is new, but like the sector, like this contract look, and then I'll swing it. But yeah, I don't like to kind of fly blind on weekly contracts. It's taken me like 2 months with ARM to sort of move to that. I had been doing SMCI for so long, but you know, I'd rather trade $150 contracts than $800 contracts on something.
Sure.
So, um, so that made sense to make that move, but I had to like watch that stock for a long time and sort of just see how it reacts in the day. And like you said, uh, the charting on the contracts too was a big part of that.
Well, yeah, how are you supposed to know if this thing is going to go only 20-30% or it's going to go 300? Um, I think you're guessing if you don't trade that regularly or you haven't watched it for a few days. Um,
Well, these guys on Twitter that were puffing their chest out about Mara moving 1%. I'm like, I don't think they're trading those options because the implied volatility on Mara 1% is nothing. Like it doesn't really move them at all. So um, they're just again they were bullish on it. It's green, so they're going to pound their chest. That we nailed this. But well, we traded Mara. We weren't looking for 1% on Mara.
yeah, no.
Like I'll just say that. I mean,
Yeah.
that wasn't how that went. So um, we want to move to Spy.
Yeah, let's do it. Let's do it.
How are we on time? All right.
Yeah, we're good. Let's do that. Yeah.
Yeah.
38's the bottom last week we both had, and then you were 49, 549 and some change. I was 552, so we kind of each picked a side on the 550. Um, Weekly
Yeah.
Doji on Spy. 442 was the low, so we were like $4 off the low. Kind of stayed more inside the range, and then 550.28. You were right about 550 being the top. So gonna give this dub to you on this week. Even though we were so close, your thesis was definitely 550 is a problem.
I was I was sweating it a little Friday morning that we were gonna. I mean, I wasn't in it, but just for bragging rights,
Sure.
we just it rejected pretty hard there. But I wouldn't read too much into that. Um, it being a Friday, and then you know leveling out. I think. I mean, usually on a Friday, to me, you get an initial pop, a pullback, and then it finds some equilibrium. And it did have some follow through down, which is a little bit rare. But I mean, I'm not seeing a lot crazy in options. I will say that I got a new one for us that I think people should write down. It's this December 500p, and the contract is active but neutral right now. But that's going to be the one that they're going to buy and sell a lot of, and you're just going to see a lot of activity. If there is kind of a bearish look, even a pullback to 520 to 530, that December 500p is going to do very well. It's trading at around $650 right now. So large volume, 184,000 contracts exchanged on Friday. So definitely looking at that. That's going to be a big barometer for me going forward.
Just from a
Um,
just
the
go ahead,
rest of
go ahead, go ahead.
yeah, yeah. The rest of the contracts are just kind of real close in expirations. Like a lot of the volumes concentrating up to this July 19th, and I don't see anything dramatic in those just yet. So, what were you going to ask?
Um, no, I was just gonna say the trend on SPY really hasn't changed since November. I mean, we had 3 weeks of
Yeah.
pullback, but the trend really didn't change. You got a higher low, and 550 was where we were supposed to be in good conditions at the end of the year. I mean, that was kind of the plan or the target. 550, 560, depending on who you talk to. You know, those guys like to act smart and argue over $10 on SPY. But the fact that we're already there just leads me to believe we're going to have more broadening and and that tight range, or not as much momentum north. I'm surprised this chart hasn't had a sideways like say 6 weeks yet. To be honest with you, um, I don't think we're in the. I don't think we're gonna have a big pullback without some worldly event or something like that. Um, like we did these 3 weeks. Here, I'll give you a date even. Like we did in April. But I also don't think we're going to blow out the top. So sideways actions and broadening is what it still feels like to me that we're kind of stuck in that market thesis currently.
Yeah. So I got some numbers. I'll throw out there. I'm gonna say 537.55 on the downside,
Close there.
and then um, find this wick I like here, um, and then 548.19
Ooh, really?
upside. Yeah.
So you're tighter and lower than last week. Elaborate on that.
Well, Fourth of July weekend's part of it. No earnings of note, um,
Okay.
and kind of I just think maybe a sour start to the week, and then you know climb back up and finish strong, and maybe have a decent Friday. That's
I like it.
sort of what I'm seeing in the flow. But yeah,
I got 538.69, 552.52. If you write down the numbers, those are exactly the numbers from last week. We'll roll these dice again. We're in a tight range.
yeah,
We're just in a tight range. I think we stay there for a little bit with the upward trajectory still winning. Bears can't fucking win right now. I don't know if you see it on your side, but I've noticed that on my side is that dips get bought up. Um, Pretty much on anything. The Bears just don't have a lot of strength, even on bad news plays. Who got short reported this week? I forgot who it was, um, and I'm drawing a blank. But even on news plays like that, um, they just don't have a lot of downward pressure, and that's why you're seeing. It's not because I'm a TA expert. It's not. It's because I just know where liquidity's at, and you're seeing that hold in a lot of cases. So, for me, really leading on the 50 to 200 and those historical levels have been great. And I just think we see that continue, which will keep SPY sideways because we're range bound on the shares of everything else.
quick chart to illustrate what we're talking about with Bears. Into uh, It fell on earnings, I think, for good reason, and then they've got IRS free tax software, and just kind of a bloated stock to begin with, and then it had a little bit of a follow through, but we're headed back to all time highs probably. So it's the market's just very very forgiving of and Bears can't get the follow through on a story, and software is just such a good illustration of that. Chips, hardware flattened out. They're just putting that money into software. They're not shorting. They're not sidelining it. Um, they're finding a place for their money, and it's part of that small cap story that we'll talk about too. That and I think you're better off. You want the bad days. You don't want the bad days to be your confirmation to short something. That's not what you want. You want bad days to approach a level where you have some history and a thesis, and you let the chart make the trade for you, not your bias. And that is just going to be so crucial into the fall to me until
Yes.
until the story changes.
Yeah, no, I'm big on that. Usually I'm early on that, to be honest with you. You beat me to this on the pump market though. But I don't
Yeah,
have it. I don't have a thesis panned out right now, and that should be telling to a lot of people that we're
yeah,
just going to kind of continue this cycle that we're in, and um, it's a it's a broadening of the oversold or they're forgotten, in my opinion. It was hymns. That was your short report, sir.
absolutely. Yeah,
If you go look at that chart, though, you can see, and then line it up with the Intuit chart you just talked about, you can kind of see the same shape forming. So, um, yeah, no,
yeah, yeah,
good stuff. Good stuff. You ready to get to work?
yeah, yeah. Let's do it.
Perfect. Like and subscribe. Retweet for more. Link
I'm ready.
somewhere.